Recording going. Okay, welcome everyone to a new presentation or new presenter for Boston Business Mentor, and we're very excited to welcome Christina David. This is going to be a great presentation on money, money moves to be specific, strengthening your financial foundation for growth. I've seen part of her presentation, and you will walk away with usable information today. Without a doubt. So as we get started, just a really quick reminder on the different resources at Boston Business Mentors. I do assume that I think we have a new group of people with us today and some old friends as well. So we are focused on small business education, whether you are trying to figure out what business you want to go into, to being in business, to growing that business, to exiting that business. We're here for that entire journey. We offer that information through our workshops and webinars, through our website has a lot of really great information, and through our mentoring. Our mentoring is, I think mentoring is extremely important to the success of a business. So we do have that QR code there to get a mentor. We'll touch on that real quick again at the very end. But for now, I'm going to go ahead and pull down my share and let Christina get her screen up so we can get started on this really important topic.
Thank you so much, Teresa. Good afternoon, everyone, and thank you so much for being here. Bear with me 2 seconds. Make sure that I can get the screen up to share with everyone. So, perfect. Teresa, can you see my screen?
It looks great.
All right, perfect. And so a little bit about me. My name is Christina David. I am the owner of David and Associates, where we provide accounting needs to all business owners, but specifically small business owners. Generally, we work with people who have either just started out or they need some help putting their foundation in place. So QuickBooks setup, QuickBooks cleanup is a lot of what we do, and then putting strategy in place to help businesses grow or scale to the next level. And so I'm so happy and so grateful to be here with all of you. And I hope you walk away with, clear next steps as to how to get your business to that next place. So without further ado, um, let me just jump into my notes here. Da, 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 da. So again, we're going to be talking about how to strengthen your financial foundation for growth. So I'm going to throw out a couple of questions. I'd love for you to, drop comments in the chat or raise your hand. Teresa will be reading a few of them. And then we'll also poll you a few times just to, again, really get the thoughts flowing, the ideas going, so that you again leave this session today with as much value as possible. So my first question, raise your hand if you've ever looked at your bank account to decide if you can afford something. Or maybe you've been surprised by a tax bill. Or you had sales coming in but still felt broke. Or the other one, the last one, avoided looking at your numbers because it felt overwhelming. How many of you can relate? I'll take a second or two. Teresa, let me know what you're seeing in the chat. Well, while I wait for Teresa to let me know when she sees you're muted, I don't know. Um,
Oh,
if
yeah,
you answer,
sorry. Yes, there is someone with their hand raised, and yes, I will read out when what comes through chat.
okay, perfect. Thank you. So if you answered yes to any of these, you're in the right room. Why does this information matter? If your money feels messy, your business will too. So many business owners focus on the marketing, the social media, the sales, operations, but the businesses that survive and grow actually understand their numbers. I can't tell you how many times I've spoken to a business owner and they're so focused on like their social media, but they don't understand like, yes, it's great to have a presence on Facebook, on TikTok, on Instagram, but if you're not converting, right, then you're not necessarily making any money in your business. And that's what's going to support your business going forward. And so it's important to know, like, yes, I'm spending the time here putting out this content, but how is it actually converting the people who are following me, who are engaging into actual dollars? So again, I'm just going to say, that survive and grow, they understand their numbers, not just again the marketing numbers, but the social media numbers, but all of their numbers because they all work together to tell a story. I'm going to pause. Did you get any other hands raised? Hands in the chat for the first question, Teresa?
I did not,
No? Okay, perfect.
but I get a
Um,
thumbs up.
you got a thumbs up. I saw the thumbs up. Perfect. So again, for the businesses that survive and grow, they understand their numbers. Financial clarity. Let's talk about financial clarity for a second. Financial clarity helps you make better business decisions. You get less stress from knowing your numbers and knowing how your business is performing. You understand your profit, and more profit is able to come through your business as you're putting things in place. You have greater confidence in running your business, and then there's sustainable growth. So, again, I'm going to repeat that. Better decision-making skills, more profit, greater confidence, and sustainable growth. The truth about business growth. Did you guys know that revenue does not always equal success? So let's look at these two examples that I have up on the screen right now. And we're going to actually poll you and see who what you think about this particular case. So again, revenue does not equal stress. Oh, sorry, stress. Ha. Revenue does not equal success. And so for this example, we have two businesses. One, their total revenue is 250,000 with a profit of 15,000. Business B, their revenue is 150,000 with their profit being 50,000. So again, I'm going to repeat that. Business A, 250,000 in revenue, profit equals 15,000. Business B, revenue is 150,000 with their profit being 50,000. The question I would love to throw out is which business is healthier? And I'm going to pause here, give you a moment to answer the question. And then Teresa, you can let me know what you're seeing as far
Yep,
as the responses.
yep, yep. We have people are clicking in, so we will share that here in just a few seconds.
Perfect.
Um, all right, I think we are here. So here's what we have.
Okay, so yes, everyone, 100% of you got the answer right, which is B, right? The company bringing in more profit is the business that is healthier. Why is that? It's showing that they understand their numbers, right? They're managing the business better than the company actually bringing in the more revenue. And so again, it's not always about am I successful based off of the revenue? You have to look at both sides, how much money is coming in and how much money is going out, and then what is left, which we'll touch on momentarily. So going to the next slide, knowing your four numbers, I just touched on this. It's important to, I call it the financial scorecard, to understand these four metrics for your business in order to really understand how the business is doing, as well as what do I need to, really focus and hone in on so I can make it better, what's working, what's not working. And so the four numbers every business owner should know. Number one, revenue. How much money came in? Number two, expenses. How much money went out? Number three, profit. What's left over? Number four, the one everyone wants to focus on, cash. How much money is actually available? You cannot improve what you don't measure. And so, again, I just want to stress just because you're bringing in a lot of revenue doesn't necessarily mean that your business is successful or profitable. Why is that? It's because oftentimes when you're not paying attention to the money going out, it might feel as though you're making a lot of money, the business is doing really well, but then you're not paying attention to the back end of things, which if you run out of cash, then your business is in deep, deep trouble. I'm sure most of you know this. And so again, knowing your four numbers is critical to improving the success of your business and being able to really manage things to the best of your ability. Cash is reality. So this is a confidence check. Interactive activity. Again, we're going to put up another poll, and I'd love for you to rate yourselves as your business currently stands. So the first question, can you answer how much revenue did you generate last month? Are you very confident in knowing how much you generated? Are you, not so sure? Are you somewhere in the middle? Go ahead and take the poll. The next question on you'll see on the poll there is what are your monthly expenses? How much profit did you make? How much cash do you need to operate for the next 30 days? While you go ahead and you fill out your responses, I'll just share a couple of things I've noticed working with a couple of business owners. Again, not understanding how much money they've generated have put some people in what I like to say they felt cash strapped, right? And so it feels like they're always working. Yes, money's coming in, but because they're not necessarily managing it to the best of their ability, they lose sight of it, right? So they're not looking for opportunities to increase profitability by reducing expenses or even understanding it might be time to hire someone. So again, those are some of the reasons why it's important to not just pay attention to the money coming in, but then how is the money being managed? How is the money flowing through the business? I'm going to pause here for a moment. Teresa, do we have the
Yeah,
responses?
yeah, so I think just under half answered, so that
Okay.
might mean there's a lack of confidence, but that's okay. So we can see the results here.
Okay, let me take a look here. So with the first one, yep, okay, about 50%, 25% there. Okay, let me speak to these in real time. So for the first question, how much revenue did you generate? We had a couple of people answer, and for the most part, it was about 25% felt as though they were kind of confident with it. And so we're going to get to it later in the presentation, and I'll talk about building the muscle, right? Looking at your finances on a regular basis so that you know exactly where you are. It's a practice that I encourage every single business owner to get into the practice of doing, whether it's weekly, definitely monthly, and then there should be a planning session that happens at least twice a year for your business so that you know where the revenue is coming from for the next year, and then you can plan accordingly. Monthly expenses, okay, about the same. How much profit? Somebody was super confident there. Okay. Okay. So perfect. So again, just reiterating, right? Having the financial confidence to really know what your business is doing, how it's performing, is very important. It doesn't take you to understanding all of I like to say that the jargon in this space, I know sometimes people feel overwhelmed by all the different words and their meanings, but at the end of the day, it's truly about understanding how much money did you make? How much did you spend? And then what is left over? So again, I'm going to repeat that. You're going to hear me say more, more times throughout the presentation, but at the end of the day, it comes down to how much money did you make? How much did you spend? And then what is left over? So the whole game in one line, cash flow is king. Why profitable businesses still fail. Profit is an accounting number. Cash is reality. Example, you invoice a client for $10,000. It looks great, but they pay you in 60 days. Meanwhile, you still have payroll that is due, rent is due, vendors are still due. So again, I just want to stress you can be profitable and still run out of cash. So where are the money leaks in your business? Um, so where are the money leaks in your business? So we're going to put up another poll. And we'd love for you to take a moment and think about all the things that you're spending on. And are there opportunities to reduce spending, get more efficient, find another vendor that might be more affordable for you? So the top three expenses draining your business, we'd love to know. So some of the examples that I did pull are your software subscriptions, contractors, advertising, rent, inventory, and of course, payroll. So oftentimes, one of the things I'll see is people will hire more of a more people than they actually need to run the business. So their team, let's say they're just starting out, they're in the first year and they'll have a team of five. When in reality, they might only need two full-time employees and one part-time employee. Right. And so that's why it's really important to look at how the business is doing and then what or who you need to support the needs of the business at that point in time.
Okay. We have, well, we'll share where we're at. So we had a couple people answer.
Okay.
Here we go.
Oh, okay. Let's see. Three. Software and subscriptions. Yes, that is definitely a leak for a lot of business owners. And even in our personal lives, right? It's so easy to sign up for that thing and then either forget to cancel the free trial or you're not using it to the best of its ability to actually make the work more efficient. And so it's one of the first things I do with my clients when I start working with them. I go in, I kind of do an assessment, I look through all of their financials, and then I start asking some of the hard questions. Oh, I see you use this. How are you utilizing it? When was the last time you used it? Does it actually help you with the business? Is there a lower tier of the subscription that would still get you what you need, um, but won't cost as much, right? It might cost a fraction of the price. A real example with one of my clients, I started working with her and she was paying like $275 for QuickBooks, but I understood her business. So I asked her, I said, why aren't you on the Essentials plan? It's more like $65 a month. And she was like, well, I don't know. They just kind of sold me this product and I went along with it. And I said, oh, okay. So that's one of the first things I'm going to recommend that you do. Call QuickBooks, let them know that you need to downgrade your subscription. And it saved her, right? Every little bit counts, right? This was a money leak in her business that she had absolutely no idea was there. Let me see. Contractors. Okay. Three of three. So again, contractors, I'll touch on this briefly, and this goes back to your team, right? Figuring out what do you actually need, right? And for those of you who provide services, it's knowing how long will it take to do this thing. If for whatever reason you don't know how long it takes, it's fine to ask the contractor, hey, I have this project. I need you to, kind of own this piece. Generally, how long will it take so that you can manage the hours so that you don't get the surprise cost at the end of it, which will then eat away at the profitability of that particular project or the service that you're offering. I won't go too much into any others, but if you have any questions related to any of the others, definitely feel free to drop them in the chat and we'll do our best to answer. So let's talk about budgets. A budget is just a plan for your money. A budget tells your money where to go before it disappears. Some of the categories that should be included in your budget include your sales revenue, your payroll, your rent, marketing, technology, professional services, taxes, and then, of course, the owner pay. So I'm going to touch on these just briefly, right? So again, as you're sitting down to put together your budget for the upcoming year, or even at this point, we're in June, so the back end of this year, right? One of the things you want to do is think about, well, where is this money coming from? And then mapping it out. So as an example, if you are a restaurant owner and you know that you'd love to get into catering as well as you have the restaurant. So you already know generally my restaurant generates X amount for the week, and now I want to layer in catering. So how many catering orders can I comfortably take on? And you would map that out, and that would give you your revenue target. The next piece, payroll, and we talked a little bit about this prior, it's how many people do I need on the team to support this work, right? And you can ramp up or you can kind of take on the work, see what you currently have, and then hire a person, or maybe it's a part-time person, but making those adjustments as the work flows in. Your rent, I'm sure you know your rent is generally fixed, right? There's not a lot of room to renegotiate there. But before you sign the lease, it's understanding, well, am I in a place to actually afford this place or do I actually need this place, right? Is there a more efficient option at this point in time? I use myself as an example. I do not currently have an office, and it's because my team, we all work remotely. And so the times we do have to get together, we just go to Industrious. I rent a conference room for the day. It's a 1 day expense. It's not a monthly expense that's on my books because at this point it just doesn't make sense to do so. So that's one of the ways that I keep my operation costs like very lean. just being very realistic, being very practical. And then I have really amazing clients, right? And so oftentimes I'm traveling to their offices. And so again, it just doesn't make sense for me to take on that expense when it just doesn't make sense to do so at this point in time. So for those of you who do have businesses or you're contemplating, renting an office space, can you, collaborate with someone, right? If it makes sense to do so, right? Can you rent out a space part-time for those who own restaurants? I know it's a little bit harder to do, but can you rent out or sublet part of the space when you're not using it for the restaurant? So those are some of the creative ways I've seen some of my clients navigate this particular space, but just throwing that out there before you actually take on the expense, really sit down and think about, is this necessary for the business at this point in time? Marketing. Marketing is absolutely necessary. Marketing should represent, don't quote me on this, I believe it's 3 to 10% of your annual budget, right? And so that takes into consideration the social media ads that you might have, or someone who's managing your content. If you're putting up like commercials or putting out flyers. So all of that falls under marketing. It's up to you to decide how much of that you do, and then how much your business requires you to do. Technology, you can't get away from it. You have to pay for it. So again, just looking for the most efficient way, right, to utilize the different options that are currently available. Professional services, I'm going to highlight this one. One of the things I see oftentimes with small business owners, they skimp on this area. Having a bookkeeper or having an accountant or a tax person is extremely important. This is not one of the areas you should skimp, but you should absolutely do your due diligence and make sure that the person that you have is the right person for your business at that moment in time. What do I mean by that? If you're just starting out, most likely you do not need a bookkeeper, right? Generally, I tell people when you hit around like the 30 to $50,000 mark, this is where you want to actually bring in a bookkeeper who's going to be looking at and recording your transactions, right? And so from there, once you kind of hit six figures, you're going to want an accountant. And the reason I generally throw out that recommendation is because at that point, you want more strategy and not someone just putting in or recording your transactions. Not saying a bookkeeper cannot do that because some can, but it's important for you to do your due diligence, see what their level, their skill sets are, like the level of skills that they bring to the table. But again, 30 to 50,000 bookkeeper, generally someone who is just, managing, recording your transactions. Once you hit, just under six figures, you need more strategy. Because at that point, it's more like, all right, protecting the money, making sure that you're leveraging it, and there are other things to be considered at that point in time. The last piece is the owner's pay. You should always be paying yourself as a business owner, right? And so oftentimes, starting out, people tend to not pay themselves or pay themselves less. As a business owner, you didn't start the business as a hobby. So definitely make sure that you're making yourself a priority and you are planning your compensation. I'm going to pause here and see if there are any questions in the chat that we can answer.
Yeah, so somebody is asking about the percentage of your budget that should go to marketing. And if you could talk a little bit more about that or how you determine that part.
So generally and it depends on the industry you're in, but generally it's about 3 to 10% based off of your particular industry. And so what I tell those who are just starting out, figure out again what your business calls for, right? So if you are, let's say, a daycare provider, right? Your marketing budget might not be as large as someone who owns a restaurant or who does catering. Does that make sense? I can't see you, so I'm assuming someone's nodding. Right. And so if you're just starting out, take into consideration how you're going to reach your audience, right? And then for those who are more established, there are different ways to do it, right? Is it more of a heavy presence on LinkedIn? So your marketing should also have a plan, similar to how you're planning for your business. It's how am I going to reach my audience? Who do I need to make contact with? How am I going to make sure people know that I'm available to provide these services? And then the avenue in which you decide to leverage, then you tag the dollars to it. Again, is it going to be heavy on the social media where you're paying for ads, or are you going to dedicate, 2, 3 hours a week putting up content, right? So you're taking the pictures, you're taking the videos, and then you yourself, you're going to do it, or are you going to hire someone? And what does that look like? Or are you going to leverage, one of the platforms where you can just hire people for one-off projects? Um, that's all part of your planning. And then you figure out, again, financially, what makes the most amount of sense for you in the business. And then again, how do you extend your reach? I hope I answered the question. Um,
They said yes.
Perfect. Okay. Are there any other questions before we move to the next slide?
Nope.
Okay, perfect. All right. So hope is not a strategy. Continuing on with the budget. So the budgeting mistakes most owners make, they're hoping everything works out. And so again, I just want to say hope is not a strategy. Decide with real numbers, not optimism. Many owners budget like this. Well, I think we'll make more next month. Instead, it should more so be using actual historical data. Well, how did we perform last month? What worked? What didn't work? What can we improve upon, right? How do we again extend our reach? Some of the questions you can ask yourself as you're looking at the metrics, which we'll talk about a little bit in the next slide, I believe. Um, what happened last month? What happened last quarter? What trends do I see? Make decisions based on facts and not your feelings or, what you hypothetically think. I run into quite a few business owners who they keep all the numbers in their heads, right? And this goes from like those who are in the restaurant industry to like some of my childcare providers and some in between. I'll sit down with them and I'll say, all right, so talk to me about your revenue. And they're like, well, last month it was X. And I'm like, well, do you have an Excel or using QuickBooks or using some other accounting? Well, no, I think, right? And so again, I have to bring them back. To what the actual data says. And most people have some type of method they're tracking their sales and their expenses through. So whether it's Square, it's Shopify, Clover, whatever applications you're using, they oftentimes have reporting, options. So get familiar with them. So again, you can make decisions based off of factual data. You are not the last bill. So this is going back to the point that I highlighted about paying yourself. Most entrepreneurs pay everyone else. They reinvest in everything and then they take what's left. I'd encourage you to adopt a new mindset today. Owner compensation should be planned and your business should support your life, not the other way around. So pay yourself on purpose. Before you spend, ask yourself the following questions. Will this generate revenue? Will this save time? Will this improve efficiency? Will this improve the customer service experience? If the answer is no to all four, pause before spending. So we talked about understanding how the money is moving through the business, right? What the expenses look like. And so I'm going to encourage each and every single one of you again to ask yourself these four questions before making any purchases, right? Because at the end of the day, you want to run a very efficient and profitable business. Part of the budget planning process includes mapping out any major expenses that you have for the business, right? And so you can decide what major is. Generally, with my clients, I say anything above $5,000, right? And so if you want to refresh the website, that's something that should be planned and baked in. So going into 2027, it's like, okay, at the top of the second quarter, we're going to make this investment into the business that will then help drive more awareness as to what we do and bring in more clients, which will increase our sales by 10%, by 15%. So there's a measurable way that you're looking at this information and then again running the business. So taking yourself on a CFO date. The monthly money meeting. This is one of those things that I also, at the very start of all of my kickoff meetings, is what I call them with my clients. I asked, do you have a money meeting, a CFO meeting on your calendar? And oftentimes the answer is no. So what is a CFO money meeting? It's when you're taking dedicated time to actually look at your numbers. So you should be scheduling a CEO date with your numbers at least every single month. So once per month, you should be reviewing your revenue. Where did the money come from? Are we making enough money? How can we make things better? Are there any opportunities for, providing a better experience? So those questions will automatically start coming to mind as you're looking at the numbers. One of the things that I also recommend as you're looking at the revenue number for that particular month, you're also looking at the last month, the prior month. And then if you've been in business for quite some time, a couple of years, you're also looking at last year this time. The reason I recommend that, and this isn't just for revenue, it's for all of your numbers, is because you'll be able to pull out trends, right? So you might see, oh, okay. Generally, in the summertime, we see a lull. So maybe this is an opportunity for us to offer that new service we've been thinking about or encouraging our team to take a vacation. But you won't know that if you're not looking at the comparisons. So again, you're looking at the prior month, the current month, sorry, the current month, the prior month, and then last year if you have been in business for more than a year. The next bucket is your expenses. After that would be profit, your cash balance, accounts receivable, and then upcoming expenses. Time required generally is about 30 to 60 minutes. So this habit alone can literally transform your business. There will be things that you'll start picking up on in real time that you can make changes and again enhance how your business is doing to get you again to the target that you're looking to reach or create more capacity for you as the owner to like take time off. But again, once a month at a minimum, I recommend taking 15 minutes at the end of each week, depending on the industry you're in. But once a month will do. I'm just going to take a moment to talk about a couple of the other buckets. So expenses, again, looking at these numbers and what the total amount and what it comprises of every single month will highlight the opportunities to trim things, right? To make things more efficient. Your profit, it gives you an opportunity to ask yourself, is this enough? Right? And I'm going to pause and say you should, as you're planning out your business, know what your profit margins that you're trying to reach are. So is it 20% for the year? Is it 30%? That way it gives you something to track against, right? So if you sit down and you're looking and you're like, oh, we're at 15, but our goal is 20, then it tells you that we need to create more. We need to create more or reduce expenses to actually hit that target. Your cash balance. Do you have enough cash in the bank to sustain the business? Not looking at the cash balance month over month can get you into a situation that you don't want to find yourself in. Accounts receivable. Again, you should be looking at this on a monthly basis. This is who owes you money so you can collect. So again, accounts receivable, who currently owes you money? What invoice is currently outstanding that you can send an email, send a text, pick up the phone and call to remind them to make payment. This will help with the cash flow, which goes right back to your cash balance. And then the last one, your upcoming expenses. What do I need to plan for? Right? What future expense can I invest in that will again increase my sales or make things more efficient? So,
I have a question.
yes, of course.
Small business owners are always face choices on what to spend their limited budget on,
Mhm.
such as paying yourself versus investing in your business. Do you have a recommendation how to make those decisions?
So, yes, we talked about that, right? It's knowing your numbers, right? And so I'll say this, as it comes down to reinvesting in the business or paying yourself, there will be times where you will take a step back in order to spring forward. So it might be, okay, instead of paying myself, I'm going to throw out a number, $2,000, for this pay period, I'm actually going to pay myself $1,000 because that amount that I'm leaving on the table will put me in a position to hire the next person, which will create capacity for me to pay myself $3,000 next month. So it depends on the circumstance, and it also depends on where the business currently stands. So that's why I recommend knowing your numbers, right? Is there a potential for sales to come in? Is there potential for our sales to increase next month if you reinvest the money into the business? So if, as an example, you decide to forego paying yourself for the first quarter and you are deciding to take that money and put it into creating a new website, will the traffic from that website double your revenue so that you can pay yourself not only what you would have been paying yourself, but then to catch up? So those are some of the questions you'd have to ask yourself in order to make that decision for you in the business. I hope that helps.
Thank you.
Most welcome. All right, so action plan. I'm going to challenge each of you with this activity for the next 90 days. So Teresa, you can let me know what the comments are in the what the comments are in the chat. So for the next 90 days, I'd love to see, or I'd love for you to take some time and write down one thing you will start doing, one thing you will stop doing, and one financial habit you will improve. So I'd love to hear what some of your responses are, if you feel so inclined to do so. And then I'll pause. I'll pause for like 4 or 5 seconds and see if anyone puts anything in the chat. So again, I'll read the questions while we wait. The next 90 days, what are you committed to doing as it relates to one thing you will start doing, one thing you will stop doing, and one financial habit you will improve? Anyone drop anything in the comments?
I don't see anyone sharing.
No? Okay.
Um, I,
They might just kind of be mulling over it.
yeah,
I'll I'll share some of the answers that I often get. Oftentimes people are start committing to looking at their financials in real time. So that's the biggest one that I usually hear or read, right? Reading their financial statements. The other one that comes in a close second is actually using their accounting system to make business decisions. So oftentimes, I think I talked about this at the start of this, but business owners just making decisions without actually sitting down and looking at, the current revenue coming in, as well as, what the bottom line says. And they're just kind of like, oh yeah, we're just going to do this thing and not having it be based off of actual numbers. Um, and then the number one thing that people have told me they'll stop doing is making impulsive purchases for the business. So,
yeah, those are great.
okay. All right. So I'll let you guys still ponder on that. Feel free to drop it in the chat if you if you feel so inclined to. So let's talk about building a strong financial foundation. So again, the 5 money moves, right? The key takeaways from today's session are to know your numbers, to monitor your cash flow, create a budget, pay yourself intentionally, review finances monthly. Small improvements create massive results over time. So I'm going to repeat that, and then I'm going to just say a little something about each of them. So knowing your numbers builds the confidence you need to run a successful business. Watch the cash flow. Understanding the ins and out of your cash is just as important as the revenue coming in, because if you run out of cash, you'll find yourself in a pickle. Build a budget. The budget should be the plan you have for your business. Where's the money coming from? How is the money going to be spent? What are we going to do with the money that is left over? Are we going to reinvest it? Or are we just going to, pay it out to the owner? Building a budget gives you the blueprint. As a business owner, pay yourself first. Again, your business should support your life, not the other way around. And then the last one, reviewing monthly, build the muscle, sit down, look at your financials, see what they say. Again, that will build your confidence and allow you to build a successful business. What would you change with total clarity? Picture the version of your business that runs on confidence. Consider what opportunities would you pursue? What stress would disappear? What goals could become possible with with renewed financial clarity? So part of understanding where your money is coming from and then what's left also positions you for future opportunities that you might not necessarily see coming. And so the example I'll throw out, I actually use what's going on right now in the economy. There's a lot of commercial spaces that are just sitting empty. Let's assume this particular business owner has been in business for about 5 years and they have a very healthy reserve. Up until then, they had not really considered getting or renting an office space. And so at a networking event, they run into a landlord who has this commercial space who's been sitting vacant, and they're willing to negotiate and offer, a lower monthly rent amount or a lease amount that they typically would not have considered because they've been in business for 5 years, because they've been looking at their numbers, because they have healthy reserves, they can now take advantage of this opportunity. Does that make sense? You can let me know what the comments say.
Yeah, I had somebody fill in for the previous question.
Okay.
The start doing the CEO to update, stop delaying checking my books, and improve tracking expenses.
Perfect. Beautiful. Definitely feel free to let us know how things are going in 90 days. Um, all right. And so at this point, I'm going to open it up for any other questions that, come to mind that you'd like to share. Feel free. Don't be shy. This is your time to like talk to us. So let me know what questions you currently have.
When we do have a few minutes, I'm just going to, while we're letting people type in that information, I'm just going to quickly share a quick, and then we'll go back to Christina's contact information. I'm quickly share that QR code I did promise for getting a mentor. I just want to thank you for joining us as you're typing in your questions for Christina, so we can give you that time. Perhaps you are working on some of these things. I know you're coming away with a different way of thinking about your money, but maybe you want to run through that with somebody to talk through some of those things you've put in your budget items, whatever the case may be. Consider a mentor. They can help you think through some of those things for you. So that's that QR code. So if you have any questions or comments, now would be the time to go ahead and get those in. There's Christina's contact information if you'd like to reach out to her. And certainly, we do welcome you over at Boston Business Mentors. Mentorship is free. And you will also find budgeting forms,
Yep.
cash flow forms, those types of things are on our website as well for resources. You will find the recording of today's presentation under the workshop section of videos for you to review. I'll have that posted probably later this afternoon. I'm not seeing any questions. Christina, you must have done a really great job. You filled in
Well,
all the blanks.
well, thank you, thank you. If there's anything that comes up, a couple hours from now, a couple of days from now, definitely feel free to reach out to Teresa, everyone, or feel free to drop me a note. I'm available to answer questions even after today's session. And again, I thank you so much for, creating some time just to one, sit with us to learn how you can better run your business and the importance of your numbers. Then I'll just kick it back to Teresa.
Okay. Well, thank you, Christina, for giving your, oh, wait, I have tax strategy just came through comments, but I don't know what the question is. So, um,
Can they elaborate a little bit?
perhaps they could. We'll give them a
Okay.
moment. If it, let's see. I could allow you to actually speak if that would be helpful. Um, is Sean, if you want to uh, just reply yes in the chat if you'd like to be unmuted. I can allow you to ask your question out loud if that would be helpful to you. Okay. All
Yeah.
right.
Okay.
So you'll just need to unmute, Sean, and then you can go ahead and ask your question. There should be an unmute button on your, there we go.
Yeah.
Okay, go
Can
ahead.
you hear me?
Yeah.
Yes.
Okay, a lot of these expenses are tax deductible, such as technology, subscriptions, marketing slash advertising.
Mhm.
Your website can all be written off on tax strategy, not a CPA in retrospect. A tax strategist works prospectively and can allow you to write off these deductions in conjunction with your income and your tax bracket. So a lot of them can be greatly discounted.
That's correct.
So I encourage everyone to either work with me, and if not me, with any tax strategists out there, can show you you're giving away a lot of money unnecessarily. The tax code is written for small businesses to make a, a lot of money. You'd be surprised what is legally available to you.
Okay, thanks, Sean. Okay, I do have some more questions, Christina. What would be a healthy margin for a startup versus a mature business?
So that would depend on the industry you're in. It varies, right? So if you're in construction, I believe the starting margin at the industry standard is about 10%, right? Versus like someone who provides services such as myself would be more like 30%. So it depends on the industry you're in. So I'd need to know a little bit more to give you like a definitive.
I also have a question. Do you help figure out pricing for a business?
I do. I can help. We have, yes, we can. We can definitely help with that.
Okay. All right. So I think that covers all the questions that have been submitted.
Perfect.
So thank you, Christina, for giving your time. Again, don't forget, Boston Business Mentor can help you go think through some of these strategies as well. And we hope to see you all again in the near future at another webinar.
Thank you all.
Bye.